Hey, what is up everyone? Welcome into the channel. My name is Brent with Investing on the Go. Today we're going to be covering I'm living out of my portfolio over on Robinhood. This is going to be our week 16 update. We're going to go ahead and hit up a few different areas today. Number one, go over a few, market updates as a whole, right? There's a lot of news going on out there in terms of the market, in terms of the war between the US and Iran and Israel and Lebanon. So we'll go ahead and just chatter a little bit about that. Also take a look at the markets. Then we'll dive into the income. We did receive some dividends this week, so big update there. We received over $1,000. We'll cover what stock here in just a little bit. Number three, we'll go into some buys that we performed this week within our individual account over at Robinhood and some of the buys that we did within our retirement account. Then we'll roll into number four, our total dividend portfolio as of today, Thursday, the 16th. Go over the income update so far, and then our update of our big wins and plans as of now in our week 16, right? We initiated some plans last week. We kind of discussed some, and it all happened this week, along with some big wins, saving me $600, and you guys can do this as well. So with that said, if you guys are brand new here, definitely go down below, smash that subscribe, smash that thumbs up. Would really appreciate it if you guys enjoy the content, and check out the pinned comment down below to join the Discord server completely free. Okay, let's go ahead and start over with the market update. Now, every single day I've been posting over on Instagram in terms of what's been going on a daily basis. Or, earlier this week, the US said they're going to do their blockade. They were going to be blockading the blockade. But then some news came out that they're not blockading everyone. They're only letting everyone in and out besides the Iranians. But somehow Iranians have been going in and out. So that's been kind of like, not quite there. The US and Iran are looking like some kind of deal might come into place. Trump's been saying often these last few days that, we're not going to need the extension. There is going to be a deal either made shortly or by force. So we'll see how that goes. Iran's saying in the past that they don't want to have anything by force. Here recently, the Israel and Lebanon are meeting and have agreed to a 10-day ceasefire. And also, there's a few other things that have been going on out there, right? But we'll see how it all goes into this weekend. I think the ceasefire is going to be ending here very shortly within the next, next week at least, if not, pressure into the weekend. We'll see how it all goes, right? As of the S&P 500, it has been on an insane rally here. I believe as of here on the 2nd of April, I think it may have been, we have essentially been on nothing but green. I think we're either on day 13, day 14 of green, 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 green. And we can see, we'll take a look at our Robinhood portfolio here in just a minute. But essentially, as of the beginning of March up until where we're at now, the market has essentially just recovered all of our losses. So, we'll take a look more at that here in a bit. Now, jumping into the income update, we did receive over $1,000 of dividends, and that was all paid out this week by our TAP Alpha Innovation Fund ETF. This is one that tracks something very similar to the NASDAQ ticker symbol QQQ, but in this case, this is a covered call ETF. Their total return is very similar to that of QQQ, only they pay out roughly, I think this one pays out roughly 14-ish, 16%, depending on where you purchase it out, the yield is at. But we own currently 3,930 shares. It went ex-dividend on the 14th, which was on Tuesday, and we received our payout here on the 16th, which is today. It hasn't arrived within our account. Usually, I'll see it hit the account by the end of day on the 16th. So we should be receiving that here sometime shortly. But it paid out 0.3502 shares for a grand total of $1,376.36. Now, what do we do with these dividends? Now, we've chatted about this in the past, but if you guys are brand new here to the channel, I completely live from my individual account along with some miscellaneous income here. So I receive dividends. I have miscellaneous income from my affiliates referrals and other miscellaneous things. Plus, I run a real estate business on the side and help out others with other little miscellaneous things. But all the capital runs into my brokerage account, which was in the past over at Fidelity. I've been transferring over to Robinhood as being my core hub. All my daily expenses from, everything right now. I just ordered some tires for my wife's car. I'm doing a brake thing on my car to fix my brakes. All of our daily expenses get loaded up on our credit card. And currently it was Fidelity as of the past, but I got approved for the Robinhood Gold card. I do have the Robinhood Gold card. I don't have it anywhere nearby, but we got this handy dandy little thing here that it came in. So I have it in my wallet. I don't have my wallet with me right now, but I went from 2% cash back to now 3%. That's a huge difference. You know, if you're averaging around $2,000 per year of monthly spending per month, that's around $720. But with the same amount of spending at $2,000 on a 3% cashback card, instead of $720, it's now $1,080 per year in cashback. So just by that small little difference, some months are obviously going to be higher or lower, but if you're doing that medium average around 2,000 or even 3,000, it does add up quite a bit. But every month, these dividends, they're used to pay down our credit card back down to zero. And those cashback points get back into my individual account, which are able to be reinvested. I pay down my mortgage, which we pay down every single month. We also have one car loan payment with a few years left to pay out. My car is completely paid off, but my wife's is still being paid down. So once we pay that off, it'll just be done and behind us. And that any excess capital that we have remainder, either from the dividends that were paid out, miscellaneous income, or from cash that I'm producing for my real estate business, then I'll reinvest some capital beyond where I want to maintain my savings rate into appreciating assets. That's kind of what we do with the income that we received on a monthly basis from our individual account. Now, that was our income and sort of how the income kind of flows. Okay, jumping into our buys this week, we did perform some buys. I've been buying up some BTCI. This is the Bitcoin covered call ETF. This is NEO's Bitcoin High Income ETF. I've been picking up, I picked up 7 shares on Monday. I bought it at $34.78. And then again on Wednesday on the 15th, I picked up 6 additional shares. I wanted to bring my total shares for this position up to 300 flat. So I picked up another $35.62. Every week right now, I'm investing roughly $500 or so, $500 to $1,000 right now. Just kind of dollar cost averaging, looking for opportunity right now with the market essentially back at all-time highs and, you know, maintaining in this area. We are looking for a bit of a move, you know, breathing room for the market to pull back, breathe, and then deploy some more capital in. Right now, I'm just not deploying heavy amounts as I was in the past, like with $1,000 into TDAC or $1,000 into T-SPY or something like that. Right now, we're just you know, doing smaller things. So about $500 a week right now, dollar cost averaging. So we did pick up some BTCI in the individual account over on Robinhood. I'll talk more about the retirement account here very shortly. That was part of our plan last week and how it all happened this week. Number 4 are dividend portfolio and income update. So dividend portfolio wise, we can see here, we bumped up our share count on BTCI. We were at 287. Well, we were at 280. Our average cost basis was 52.17 a few weeks ago. We've been averaging down, right? So last week I bought 7 shares. This week I bought 13 shares. That bumped up my share count from 287 to now 300. This needs to go to, I purchased them last on the 15th. So I bumped up my total share count to 300. My Bitcoin income was $223.97. It is now $234.12. On a monthly basis, I increased my income by $10.15. On a yearly basis, multiply that monthly by 12. That is $121.74 that I increased my yearly income by. And that is as of right now. If Bitcoin, you know, it's kind of stabilized around 66,000 to 70,000. It's been kind of holding its own. I don't believe it's going to be dropping down into that $44,000 range. Not a lot of individuals thought, hey, we're going to be moving in this range. I think Bitcoin will kind of maintain within this $66,000 and $74,000 range, just kind of trending. You know, if I want to pop over and look at Bitcoin specifically here, we take a look at the last year. It's been in this range. Obviously, it did fall down here to 60,000 and has recovered from the $60,000 point, roughly 25%. So we're not buying it at the lowest point, but I'm definitely not buying it where I had been in the past. And I am averaging down on this position. So we also received some dividends from TDAC. As I said, I like to put this in here. So here's my last dividend that I just received this week, that $1,376.36. It hasn't been reinvested. It's sitting in cash in the account, or I don't think it's hit the account just yet. But based on the dividends that we received from our covered call ETFs, we're only down roughly 0.23% from when we invested and all the capital that we've received. There's other positions in my portfolio, such as SPY-I and QQQI, that paid me out quite a bit of dividends back in 2025 that I'm not including in here, which would actually put my portfolio out ahead in real-time gains and losses, but I just haven't added those in here. So overall, in terms of the equity that we've invested into the portfolio, we're only down 3.62%. And yeah, we're nowhere near, bottoms, or we're nowhere near where we were at just a few weeks ago in terms of loss, because we were down pretty big a few weeks ago. Okay, so jumping into the wins and plans going forward. So as I said last week, my plan going into this week, I initiated it last week. I got all the paperwork done, signed, and notarized, sent it off to them, and then they got back. They went through the whole process of getting my funds rolled over, and it hit my account this week. So I was holding Fidelity mutual funds over with my 401k. They had to liquidate those in order to transfer the capital over. Lucky for me, that capital and the ETFs were liquidated on, I think, Tuesday, and then the funds hit my account Wednesday. So I didn't miss out on a whole lot of capital gains, the recovery. And luckily, the last few days where it's only moved up here and there a little smidge, I did miss out on those, but I've began to deploy that capital that we received in my retirement account, and we'll cover that here in just a minute. And then the other big win this week. Now, in the past, I updated my insurance for my personal home, my car, from Geico over to Allstate. I was able to save $720 at that time. I went ahead and also moved over some landlord insurance policies for my properties. I have a single unit and a duplex that I've converted over from USAA over to Allstate. I was paying $1,551 for the 3-bedroom, and I was paying $950 for the duplex. These are smaller units. It's like 800 square feet, 2-bedroom, 1 baths each. I was paying $950 premium on those, and those are going to be expiring here shortly. I was going to have to renew those, and normally on the renewal process, it bumps up your premium. I was able to move those over to Allstate. So my old premium was $2,501 per year, and I rolled over my first property from $1,551 down to $1,039. Same dwelling coverage. They call me back saying, hey, they can cover those now. In the past, I wasn't able to get them covered because there are a few older properties that they were not, the plan that they had wasn't working, and they would only give me cash insurance versus dwelling and rebuild insurance. I was able to get the rebuild and dwelling insurance back at the match that I had previously, upwards of around, I think it's $280,000, $300,000 of dwelling insurance, but the premium fell down from $1,551 to $1,039, and then from $950 to $843. So my total premium went from $2,501 to $1,883. That's a savings yearly of $618 right there. So if you guys have a personal home, a car, tenant insurances, umbrella insurance, life insurance of any sorts, reach out to different companies. I have a referral for Policy Genius down in the pinned comment down below. I used them in the past to get my life insurance set up, and I think I used them again to go through and do my home and car insurances here. And that's how I kind of landed up with Allstate. But they just kind of gather the best policies out there possible and kind of give you the best rate, right? So it's always worth looking for opportunities and lowering your insurances by swapping. It does help out quite a bit. Okay, going back to the retirement account. So I did transfer my retirement account for my 401k over to Fidelity. What was the plan there? Why didn't I do it in the past? There was no fees. There was no maintenance fees with my 401k. It was invested in a Fidelity S&P 500 fund, so I didn't need to bother. It was fine. It wasn't losing any capital. It was just kind of moving with the market. But Robinhood has this thing right now going on with Robinhood up until the very end of April. They give you a 2% uncapped match on all IRA, Roth IRA transfers, and rollovers with Robinhood Gold. So what was my plan here? Well, I already had a retirement account over with Fidelity. I have my Roth IRA and my IRA that I had heavily invested into Microsoft. right? I put roughly $80,000 into Microsoft a couple, months ago back in February. It did dip nearly 15% at one point. Recently, it has essentially all recovered all the way back up. Now, I did have $90,000 split between two accounts, about $45,000 per each account, rolled from my Roth 401k into my IRA and Roth IRA. So I still have about $45,000 of cash in my retirement accounts I got to deploy. Well, I deployed roughly $42,000 into AbbVie, and I picked up 100 shares in my IRA and 100 shares in my Roth IRA. We can see here the cost basis. If you go into the buys and sells over here, that's all right in through here. So I picked up in my Roth IRA 100 shares at 208.78, and I picked up 100 shares at 208.70. So we pop over here to AbbVie, and we are kind of reaching I'm not out of the trend, right? We haven't broken any sort of trend, but I do feel we kind of hit a trench here. We hit a bottom back in February 2026 here. There was a bit of a dip. We retraced, hit that support, bounced up, and we've been having higher lows and moving on the uptrend. They also beat out Pfizer recently for one of these new drugs, and I do believe they're on the up and coming. Their forward PE has came down quite a bit when you're looking at all the little financial metrics, right? Up there in the past, they were roughly around like a 20, 21, 24 PE ratio. Forward looking is around 14.56, so I think 17 at the moment, and just continuing to look a lot better deal right now. So I'm not buying them as they're breaking above. Yeah, they're not breaking above any sort of 50-day, 200-day moving average. They're just looking like a recovery buy, and that's what I'm looking for right now. I'm looking for opportunity right now in the market that doesn't have much opportunity. Here's the month to date, right? As of the beginning of April, this is the S&P 500. We can see technology, consumer cyclical, industrials, financials have essentially, communication has all popped higher. Oil, obviously, as the war has that ceasefire announcement, energy has been coming down. So I'm not looking into energy at the moment. There's a lot of volatility that can happen with energy at any given point. So instead, what I'm looking to look for is opportunity within the healthcare sector as money moves out of these companies that have propped up here recently, right? Within the last beginning of the month, Amazon is up nearly 20%, Google 17, Meta 18, Nvidia 14, Broadcom 30, Microsoft 14. These are back at near all-time highs. Microsoft and Meta not at their all-time highs just yet, but I'm already invested into Microsoft. I am going to be buying up some Meta here recently. If it pulls back right now, it's at a resistance point. So I did deploy into AbbVie, and I'm looking at potential like UNH, United Healthcare, as a potential buy. I know I kind of added it into my chart here so I can kind of monitor it here. I was looking at buying it again yesterday with on Wednesday through here. I was looking at buying it, but I chose to buy AbbVie instead. But I might still buy that in the future going forward. But as I said, the plan at the moment is to, I don't know why that screenshot disappeared. Oh, there it is, right there. Oh, nope, doesn't want to appear there. It doesn't want to appear. But we began deploying some capital into AbbVie at the moment. I'm looking for opportunity into potentially buying up some Meta and some United Healthcare and maybe something else. If I can find some opportunity out there in the market, I will buy some of that as well. And then as we get towards the end of April or to where I feel comfortable rolling over that my Roth IRA and my IRA at a 2% uncapped match, that should roughly net me $3,378. Right now, if I were to roll it over to Robinhood, that's how much my match would be, my bonus match. So I'd receive roughly, over $3,000 just by rolling over my IRA and my Roth IRA. So that's kind of the plan right now. That's why I started down the path of rolling my 401k into Fidelity, and now I'm going to be rolling my Fidelity accounts over to Robinhood. Just have it all in one place, all working for the overall same mission, right? To build this portfolio up. And we're not 100% deployed yet, right? There is still a lot of capital that I do want to deploy within my, oh, there it is. Now it's appearing. Yeah. I still have capital that's sitting in my Fidelity accounts that I can either leave as cash, letting the market pull back a bit and then deploy that capital, or as I said, I'm eyeing Meta, I'm eyeing United Healthcare. I feel like I got a good position in AbbVie at the moment, and I'll just let it ride out for the time being. Microsoft has recovered back to where, it was initially when I purchased. If we take a look at our stock journal back when I purchased Microsoft, not Meta, right? I sold Meta. I'd be down still 5% from where I sold Meta, and I rolled it into Microsoft. So here, I sold out of Meta, $81,000. I rolled that capital into Microsoft. I'm only down a smidge on my Microsoft position versus if I had left it in Meta, right? Right now, if I buy Meta, I'm buying at a better price than where I initially sold it at 7-Eleven. These are in retirement accounts, so I'm not having to worry about capital gains or anything, right? I could just take capital, buy into Meta, hold it for the long term, and just wait for the appreciation there. But our purchases lately, as of late, since that market recovery, have been doing really, really well. Okay, let's pop over into Robinhood. And we also have capital within this portfolio as well. So we can see here, over the last month, I rolled my portfolio from Fidelity into Robinhood. In that first week, we weren't quite at the bottom. We essentially bottomed out here on March 30th. Our portfolio was sitting at $310,000 in Robinhood. And then as of the last month, it has continued trending higher and higher and higher. This is why I just kind of sat back and I just continued to dollar cost average normally as I would be, and I was looking for opportunity. Right now we're back at, once again, all-time highs with the portfolio sitting right there. I do have capital sitting in cash. Like I said, I'm deploying roughly $500 a week, just kind of dollar cost averaging into the market. And I still have some credit card bills to pay down this month. We just bought my wife's new tires for the all-season tires, I think it was, for her car. And then I'm doing a brand new brakes into my car, so that's going to be added to the credit card. So before I deploy all the capital into the market, I want to first pay down all of our debts back down to zero for April, because it's going to be a little bit of a higher month. And then I'll deposit more capital into the future. Plus, we're still getting our tax refund as well. That'll get deposited in here, and then I'll have more capital to deploy going into the remainder of 2026. I'm hoping we'll have some pullbacks, right? The market needs to breathe. It really can't maintain this upwards movement within the S&P 500, within the NASDAQ, right? There has to be a bit of a pullback, whether that is just a small 1 to 3% pullback, or we pull back and retrace these gap ups here recently within the last couple of days. I know we had a gap up a couple of days ago, right? I don't know. I have to look where our gap ups were, but I'm looking for a little bit of a breather before I buy into the S&P or NASDAQ covered call funds that I'm currently buying, which is T-SPY and TDAC, and just kind of diversifying at the moment with some individual stuff. So that is it for my plans and my portfolio. Let me know down in the comment section below. Have you bought anything this week? Dollar cost averaging to anything special or any individual stocks? Let me know. Also, do you have any big wins or plans for April yourself? Let me know down in the comment section below. I would always appreciate all the comments. And check out the pinned comment down below for the link to the Discord server. You guys can always ask questions in there. And that is going to be it for me. I do appreciate everyone tuning in and hanging out. And I'll catch you guys in the next one. Bye-bye.